Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the low time frame with this WXY sideways corrective structure, where W is a flat, X is a complex structure, and in Y we're either looking for a flat structure as well or a zigzag to the downside, as the triangle is too early to call. Most common target area for a wave Y is between the 0.618 and the 1.236, taken from the high to the low of W to the high of wave X, giving us a target between 41.7 and 39.1k, which, as you can see, has already been hit. If we then look into the scenarios just mentioned for this wave Y, we start with a zigzag to the downside here, where we're then looking for an expanding diagonal in a wave A, followed by a B and then a C to the downside. Now, an expanding diagonal is not common. It is a rare structure, which does lower the probabilities a bit for this particular zigzag. But something else that for me at the moment is also very important and not really something you like to see is the high being made before the 382 fib time. The fib time here is taken from the high to the low of A to compare the time of A with the time of B. Preferably for a wave B, the corrective structure ends after the 0.382. Of course, price can still continue in a corrective structure here sideways and range for a bit. However, we already touched the 786 Fibonacci taken from the high to the low of A, which is a very high move for a first retracement of a wave B. If you're looking, for example, for an ABC zigzag, then preferably your first structure, your wave A, hits the 302 or the 05, then rejects, then moves back up in a wave C and hits the golden pocket or 786 area. Hitting the 786 with only your first structure to the upside does not give great probabilities for this scenario as well. So that is something we have to keep in mind. If we do look for a C to the downside, then preferably it's a quick move to the downside, impulsive wave, where we do have some support to the downside as well. First of all, there's a blue box here, 40.9 to 41.3k, and then the yellow one, 38.6 to 39k. If we look at the flat scenario, then we are looking for this move to the downside being a three-wave structure, and then we're looking for an ABC 535 towards the upside. Here we have this big area as the common target area for a wave B. So it's between the 302 and the 886, which is between 42.9k and 41.8k, which of course is a big area. So what is most important is to look at the subwaves that we get over here, because we do expect this wave B to be a bit longer as well, at least similar or somewhat similar to this wave A. So let's see what then happens over here, and if price can find support for then a move towards the upside, where if we look for wave B, the most common target area for a flat is between the 1.236 and the 1.38, taken from the high to the low of A, giving us a target between 45.1k and 45.5k, after which we then want to see an impulsive move to the downside in a bigger wave C. The most bullish scenario is that you already finished your WXY over here. Y is in on top of the 0.618, and this move to the upside is a wave 1, followed by a wave 2, and then we want to see continuation to the upside. In this scenario, the most common target area for your wave 2 is between the 05 and 786, taken from the low to the high of wave 1, which is between 42.7k and 42k. And what you can see in these different scenarios is that we are looking for a retracement. Over here in the wave 2, we're still looking for a deeper retracement. If we're looking for a wave B, we also still missed out on hitting the 382. So preferably, we are still looking for a deeper retracement. And also, if we're looking for a wave C to the downside, well, then clearly you're looking for a deeper retracement as you're looking for lower prices. So there's some confluence there, which is important for the probabilities coming up at the end of this video. Now, in this scenario here, the most bearish scenario, we are looking for a zigzag 5, a 3, and then a 5 to the downside, where this is only your wave 1, looking for 2, and then a wave 3 to the downside, where the most common target area for C is between the 1 and the 1.236, taken from the high to the low to the high over here, which is between 40k and 39k, which is in confluence with that golden target box over here. The 1.618 is also a target for a wave C, still at 37.2k, which is in confluence with some of the support areas that we have over here between 37.8k and 36.4k. Now in this scenario, we are then looking for an impulse to the downside, right? So this expanding diagonal is your wave 1. Looking for 2 and then 3 to the downside. But the same thing applies for this wave 2 as for the wave B mentioned earlier, where if we take a fib time from the high to the low of this wave 1 over here, and we toggle on the 0.382, which is on my chart right now, you can see the high over here for this potential wave 2 has been made before the 0.382 fib time, which is not common for a wave 2. Most common, a wave 2 ends the corrective structure after the 0.382. So this is not really what you like to see. The 786 is a common target for a wave 2, so that works, right? It's just that time-wise, it would be very, very short on these lower time frames here, the 2-hour chart at the moment. Of course, we're going to observe the retracement, potential retracement. We get to the downside and then reassess the probabilities, but this is not really supporting this particular scenario. If we zoom into the local structures, we go to the 15-minute time frame here. Then the bearish scenario, where potentially a corrective structure could be finished, so this could then be the high of your wave 2 or your wave B, is this one over here, where we're looking for a zigzag in wave W. This is then wave A, this is your wave B, and then you have your wave C, which was a very nice zigzag then to the upside in this case, where the 382 is a common target for a wave B, less common for a wave 2, increasing the probabilities a little bit that this might be a wave B instead of a wave 2. Also, if we look at this move over here to the upside, then the highest amount of volume of this move to the upside was sitting at the top over here. As you can see as well, right? Move to the upside, volume pretty low, and then at the end, once we reach the high, we got the most amount of volume, which is also something that you do like to see in a wave C, and then a potential A, B, C, ending your wave W. Then we have an X, and over here we're then looking for another zigzag to the upside in a wave Y, which is at the beginning quite difficult to count, because somewhere here you need a zigzag, or at least here you want a zigzag, but here you need a 5-wave structure in a wave A, which then potentially is a diagonal type of move on the lower time frames before you then eventually move towards the upside. Now the target area for a wave Y is between the 0.618 and the 1.236. The 0.618 has been hit, taken from the low to the high of W to the low of wave X, so that is a valid target. And when we look at the volume is not really that great for a normal impulsive structure, reason being that volume is in the high again. If we look at the volume pattern here, of course we started on high and then we moved to the downside, low volume, and then you can see here volume is moving to the upside as price is moving to the upside as well. But if we think about an impulse 1, 2, 3, 4, 5, which is coming soon, preferably your final leg, your wave 5, is on lower volume compared to your wave 3, but that is not the case, and this does increase a bit of the probabilities for a more corrective structure that we have going on over here, because we finished on high volume. If we then look at the bullish scenario, we are here looking at a wave 1 or A, followed by 2 or B, and then we're looking for a continuation to the upside in either a wave C or a wave 3. Now in this scenario, then again, summarize basically, wave B or 2, common target area for B is all of these, common target area for 2 is the 05 to the 786. So we therefore would still expect some movement to the downside, which gives us the time as well to assess the probabilities and the structure for the more bearish scenario, WXY down, or the bullish scenario, 1 or A, 2 or B, C or 3 to the upside, right? Now here we are then looking for 1, 2, 3, 4, 5. You can see our lefty 0.382 on the chart. Again, less common for a wave 2, but a target nonetheless for a wave 2. Then we're looking for this to be a wave 3, wave 4, and then potentially here your wave 5, which does end on a bit higher volume compared to your wave 3. So an alternative to this, which would be even more bullish, would be a 1, 2, 1, 2, 1, 2, and then you expect a big wave 3 to the upside, but yeah, we have to wait and see what the price, of course, is gonna give us. So that is something that I at least have in the back of my mind, right? But in this scenario, we are looking for continuation, and the invalidation is below this level over here. If this level is hit, then we're going to be looking for either a wave C to the downside over here or a wave 3 to lower prices. If we look at the CVD divergences, we had some bearish CVD divergences here when hitting resistance. We were looking, of course, for this resistance to be hit, respected very nicely over here between 43.4, 43.7. Also, nice bearish CVD divergences when testing resistance locally, price moving to the downside. This already played out now, but we also have bullish CVD divergences. Preferably you see bullish CVD divergences with the actual low over here, but that is at the moment not something we see just yet on the blue line. And I specifically want to talk about blue and not yellow, because yellow here for me is quite useless. It's just moving down, 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 down as price is moving up. Of course, that is a bullish CVD divergence, but if you look, actually the high of this move, right, from the low to the high over here has a yellow pivot that is lower than the CVD level we had at the low. So is there bullish CVD divergences? Yes, but I prefer to look at the blue line, where the blue line actually moved up as price was moving up as well, right? So on the blue line, we do have bullish CVD divergences, but currently only with this low over here, which is then what you see on the chart, which is this low over here. We continue to observe because I prefer to also see local bullish CVD divergences here. So have some sort of support, get a bit of a move, la-di-da-la, and a bullish CVD divergences locally would give even more confidence for eventually a push to the upside, but we haven't yet reached the Fibonacci targets that I have just spoken about. So that is something I am going to keep my eye on, which is then also written in the probabilities. Of course, the probabilities are written from an Elliott Wave point of view and not what a Kuhn one's point of view. But here, what we're looking for at the moment on the low time frame, highest probability would be a flat closely followed by bullish continuation, and then the zigzag to the downside, right, which is the scenarios of this whole range. And then more locally over here, we still expect a bit of a deeper retracement to at least the 302 to the 886 area, and we just observe the structure to then assess the probabilities for the low time frame. This is most important at the moment. We were looking for a rejection over here. We got some bearish CVD divergences to show us weakness as well. For anyone taking a short or whatnot, nice, good job, managed it well, right? And now what we want to do is just observe the reaction, because if we are looking for continuation to the upside, we also want at least a little bit of a longer corrective structure. If price is just going to move to the downside immediately and not show any corrective structures here, well, you know, it makes life easy. So currently, this local probabilities, the local probabilities here, this is what is most important. We still expect price to at least move a bit to the downside in all of the scenarios. In a wave C, we want to see further downside. In a wave B, we're looking for this area over here, right? And in a bullish scenario, we're looking for this area over here. So we are going to be very patient, wait for proof of support, wait for price to hit the areas we're interested in, and then we will take it from there. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.